Hey everybody, this is Mike, head of trading and co-founder of Equity Sense. I'd like to talk to you about why, or the most common reason, let's just say at least for 2015 year anyway, the most common reason why trader accounts blow up. So what I have here is Valiant, as you can see here. It is a daily chart. So what what do I hope to achieve with this one? So if you the biggest reason I think from the things that the people that we've talked to this year, whether it was at investment conferences or whether it was people coming to us needing help, the biggest thing is in terms of imploding in terms of their account size is the biasing. What do I mean by that? So when somebody is when somebody is trading, whether you're a swing trader, position trader, whatever kind of trader you are, if you don't have the habit of being able to find or have a strategy of being able to go in and then go into a trade and have a plan of whether you're going to exit it if it's not doing well, or you're going to exit at a level that you're happy with, that's where most people have actually imploded. So that's the biggest reason in terms of biasing. Let's just say, for example, you see what looks like a nice head and shoulders here. There's a neckline there, and the right lobe looks like here. So let's just say you were thinking, even if you didn't notice or if you're not really a patterns guy, you're a price action kind of person. You look at it and you're like, okay, seems like there's a support level around 200. I'm going to start buying here because I think it's going to go to 263. Notice that it only went as far as 244. So for somebody who is very biased towards really hitting their targets, when you see that huge red candle that one day from 240 all the way down to 220, what would be your first reaction, right? If you were in this trade, obviously you'd be thinking, should I get out, or is it just going to be one of the days where it's just a very very unnatural reaction from the market, and I think it's going to go up? Almost always, 90% of the people I talk to, whether they're fellow traders or at people who are asking for help, they always have this mentality: it's going to go back up or it's going to go back down. It has to. Things are looking good, and then that's always the main reason. We always I think it's the biggest weakness for us as human beings is we try to justify the choices that we make in life, and that applies to all trading. You don't let the market, or you don't trade the chart that you have in front of you. You don't trade what's literally in front of you, and that's where everything just goes wrong, right? So looking at that, if it was me, I would probably putting a stop limit somewhere, and if I'm stopped out, I'm stopped out. But I don't ever start to assume that I'm going to be right and it's going to go to the target that I want. Going back or going to the other way, if you're a sell side guy and you see a short around 240, let's just say, and you see this far down as 222, you'd be thinking, should I be, you'd be wanting to go back to 200, but if you didn't take your profits yet again, that will come as a problem because it stayed around 222 for a while before it finally came down, right? So this is one of those things where when you're looking at a trade, you really have to manage your trade very carefully. Second thing, for those of you who trade options, when you say, for example, you only bought the weeklies and you're expecting, it to go to X or Y or Z price, and it doesn't happen, your options expire, what do? So now there you are with, how many hundreds of dollars lost because you were expecting it to go to your way and it didn't. So these are some of the key concepts that I talk about with my students in terms of how to properly analyze their trades and how to make their trades, how to manage them better, and to also adjust to market conditions. Because the problem that we all have as traders, right, is we get so isolated and we get so emotional in our trades. We need to remove that idea. Take a look at what happened with VRX, and we all know this. If you're a day trader, if you've been trading for so many years, you know what's happening. What happened with VRX this year? So, in terms of our trade with this year, we have been telling clients to be shorting 180, 160, and we have been doing that. And I put my stops here on 80, 85, and I know I've already been stopped out, and that's fine. Ideally, we wanted 50, but we didn't get that. Citron also said 50, we didn't get that. But again, there's that practicality or pragmatic aspect, I guess, if you like, in terms of the trade that you put on. The way you succeed in this market is to follow your strategies always and consistently. You cannot deviate from what you set out to do for yourself and for your trades. And I think that's one of the biggest thing that people need to understand in terms of trading, that things can change on a day-to-day basis. For somebody who was expecting it to finally go drop to 100, it took a while, about 20 days almost, before it finally decided, okay, we're going to go lower. So for somebody who was short, they might have been actually taking profits here and thinking, you know what, we'll just wait until it actually finally comes down. Most of us, again, us retail traders, we're not as rich as the billionaires on there on Wall Street. So regardless of what you may feel or what you may think of how much money you have, sitting on a trade that's continually going against you because of market maker tricks, it never really feels good. You know, so in a way, right, in terms of your trade, you need to be able to find something that works for you. Um, I'm not here to pitch, learning our strategy or anything like that. Not at all. I'm just kind of talking about, because we're kind of doing the year end stuff. So I'm here to talk about what I've seen so far this year with so many people, whether I've met them at, trading events, or people who are asking for help, because a lot of them have actually blown up their accounts. And again, it's always goes back to bad trade management, bad planning, bad strategies. I cannot speak for what you guys may be going through, or what kind of trading styles you guys have. But for me, I'm primarily a day trader. So I trade whatever the day gives me. If the day gives me only a $10 or $2 drop or a pop, that's what I'm trading. I don't try to make extremely long-term predictions as to where it's going to go. Everybody has been asking, or everybody's been wondering, if VRX was ever going to go to 50, but you only could go as far as 70. So for those of you who were trading this, you probably were thinking, you know what, probably abandon here because we're already close to 100 anyway. So the whole market, it's really, the onus is on you on how much the market, or how much you let the market take from you, and how much you take from the market. That I cannot stress enough. And I always, always, always tell that to all of our students, that at the end of the day, you are the only one clicking on that mouse, touching or hitting that buy and sell button. How much you let the market steal from you is always up to you. It's the market is always there to move in two directions all the time. Nothing is ever going to be straight line, because there's always going to be somebody with a conviction against that actually opposes your own convictions, and you have to trade that with respect to what they also have. Okay, so I hope you guys going into 2016, you guys get better. If you're a new trader, I hope again you find resources that work for you, and you take strides in improving your trading style, your trades. You don't want to make the mistakes of people who have gone before you, and be extremely, extremely unprofitable. What it all boils down to is, again, bad strategy, and of course really bad self control. If you can control yourself, control your trades, you actually stand a good chance of actually surviving this business. If you can't, that's when things just go south for you. So understand what it is that you want from trading, whether or not it's just for fun, it's just gambling for you, or this is something you really want to succeed at. You have to make that decision for yourself. Make sure you are aware of the risks, because the risks of losing money is extremely real in this market. I've been doing this for 11 years, and the first few years were extremely, extremely difficult in terms of really getting the hang of things. So in the end, find what works for you. If you feel like you need to go buy more books on Amazon, by all means do whatever you need to do. If you need to go to different schools in the world to get more trading education, again, it's up to you, whatever makes you happy. But overall, as we go into the new year, I think it's good to reflect on the things that have happened this year. If you've been very profitable this year, then God bless. That's awesome. Pat yourself in the back. Continue to do whatever it is that you're doing. It seems to be working. If you're sort of neutral this year, maybe you can review the things that you've done and maybe try to improve your techniques. If you are in dire need of help this year, again, seek help where it's necessary, right? Again, I'm not saying you have to go to us. You can go wherever you want. Just make sure that if this is really what you want, you really want to be a good trader, you need to make sure that you do this right, because unless you're a millionaire, your resources, your funds are finite, and it's always super easy to lose them. It's much, much harder to recover them. Okay? So I hope that makes sense. As we go into the holidays, I wish all of you, a happy holiday season. Be safe out there, and enjoy the last few good trading days of 2015. And yeah, take care, and we'll see you folks again in 2016. Mike out.